Hello, everybody. Happy Monday. Well, it is a happy Monday. The market's not so happy today. How's everybody doing? Can you all hear me and see me okay? Let me know in the chat, please. Awesome. Hey there, John. How's it going, man? Everybody good? All right. What's your options? Awesome. Hey there, Jay. How are you? Yeah, rough one today. Obviously, we're going to go through here what's going on for those that don't know or those that don't fully understand. I mean, I think this truly caught the markets by surprise. But you know what? Things happen in the markets all the time. Surprises happen all the time, which is exactly the reason why we are always prepared for it and we buy when we can and not when we have to. And I'm talking about that protection. I'm talking about owning VIX. I'm talking about owning downside in the S&Ps or the Qs or whatever it might be. You do it when you can, when vol is super, super cheap, and not when you see an explosion like today. All right. So here's what I'm trying to, Mike, why can't I? Oh, there we go. Okay. Hey, Bob, good to see you as well. Good to see you. Can everybody see what's on the screen now? DeepSeek, Wishlist. Yeah, the snow is great out here. That's for sure. That is for sure. Okay, so how many of you woke up this morning never ever hearing the phrase DeepSeek or the product DeepSeek? I bet most of you, I would probably bet 80+% of you never heard about DeepSeek before today. Okay, so I'm going to talk a little bit about what DeepSeek is, but more so what we do in a trading scenario like this. When you get whether this is black swan or not, when you get one of these events where you see vol spike and you see the Nasdaq down 5% and you see Nvidia down 15%, biggest loss in a day ever for Nvidia. Okay, and that is what I call, everybody, my wish list. Those of you that have been around for a while, you know what my wish list is all about. But we haven't seen really an opportunity for wish list in quite a while. Okay, so first, let's talk about what this DeepSeek is. And you can Google it for yourself. You can find all the information. Basically, what it is in a nutshell, it's the Chinese version of our OpenAI. Okay, Chat GPT, OpenAI. But the big concern is not that it's competition. The big concern is supposedly, and I say supposedly because we really don't know. Supposedly, it cost the developers $6 million. $6 million versus the billions upon billions upon billions that have been thrown into the AI sector here. Excuse me. Okay, so just like OpenAI, okay, this Chinese company, they develop AI models that are open source, meaning anybody can access them. Okay, anybody can get into them. And that mobile app, which now is #1, okay, it came out, I think, just a few weeks ago. It is now #1. And that's what really freaked out the market today. Okay, so how does DeepSeek compare to OpenAI, Meta? It all comes down to how much the cost was, what the efficiency might be, and can they get the same results in the future that all of these companies, Meta, OpenAI, Microsoft, and then we'll talk about NVIDIA in a moment here, who are pouring hundreds of billions of dollars into this, okay, can they get the same exact end result as what we're getting or we're hope to be getting? Okay. Supposedly, and again, I keep using supposedly because we really don't know the honest truth coming out of China. Okay. But our government has banned the exports of basically like NVIDIA chips, high-end GPU semiconductor chips to China to combat, to really stall their advances. Okay. But this product's progress, DeepSeek's progress, suggests that Chinese AI engineers have figured out a way to work around them. Okay. And maybe getting greater efficiencies with limited resources. There's all sorts of numbers floated out there about how many NVIDIA chips they actually have versus what they don't have. Nobody really knows. What does the market not like? What causes volatility in the markets? Uncertainty. And right now, there is a ton of uncertainty. A ton of uncertainty to what this Chinese product is, but more so, boy, maybe this whole AI, maybe all the money that's going into this, maybe the whole whatever they called, I forget what the new big investment last week was that the administration announced of $500 billion, upwards of $1 trillion, but maybe that's just not necessary. But that is what's causing the, I'm going to call it panic. There's panic here in the market, not overall. When I say not overall, I mean that because the Dow is actually positive. Stargate, thank you. The Dow is actually positive right now. Volatility is, if you look at the VIX, is really not up that much. The panic is in the tech sector. Okay. But what I want to talk about how you take advantage of a situation like this. How do you take advantage of whether this is an overreaction or not? How do you take advantage of a situation where you can see this uncertainty, vol explode in certain sectors? Okay. And we talk about what's a great way to own a stock long term. Well, you could sell a put, right? Sure. Absolutely. Sell a put. If you're willing to own a stock, if you're willing to get assigned on a short put if a stock keeps going down, sure, that is a great strategy to own a stock long term, get to collect some really nice credits. I came up with a few years back, and this was really at the beginning of COVID. So those of you who've been around since then, I came up with this strategy called the Wishlist. You can do this with any stock you want, any stock you want to buy. Okay. And it is far, far superior to just selling a naked put with no additional risk. Who wants to take a look at that? Who wants to take a look at an example of a wish list trade? And again, there's only certain times that it really, really works. One of those times is when something gets really, really extremely volatile. And I'm not talking about just ahead of earnings. I'm talking about, more of a macro. Okay. So the premise to the wish list, okay, the premise going into the wish list is you must be willing to own 100 shares of your stock, whatever stock you want, at your preferred price. It's not a 100% completely hedged trade like what we normally do. This is done with the intent that if something happens, you are willing to own whatever stock it is you want, and you can pick the price you want to own. Okay, so that is the first thing that we have to realize. We would only do this trade if you are willing to have that risk on, which is the same thing as selling a put. Okay. Now, just about 20 minutes ago, I went through an example and I have it up on the screen here. Okay. I have it up on the screen here. Now, this is in NVIDIA. This is in NVIDIA. Stock was trading 121 at the time. It's right now live 119. Okay, but we're going to use this for reference. Let's say you wanted to own NVIDIA stock. You're willing to buy 100 shares at 111. Okay, 111-ish. Okay. You could have sold this 115 strike put that expires February. And again, you can customize this however you want. Use whatever time frame you want, whatever area of a stock price you want. This is the example here. Let's say you wanted to own NVIDIA at 110, 111. You were willing, you were going to buy 100 shares of stock there. Okay. Well, instead of doing that, you could just sell this 115 strike put, collect $4.80. So we'll go through the P&L there in a moment. And great, you've got your trade on. Now, what I came up with, which gives you just an incredible opportunity to make more money without adding risk, is basically doing a broken wing put butterfly. But what do you notice here? In a butterfly or a broken wing, whatever ratio, we would typically have the same amount of long and short options. That would always limit our risk. Wouldn't eliminate risk, but it would always limit your risk. By doing it like this, 1 by 3 by 1, okay, what do we have? We actually have one extra short option, right? No different than having just a short put, right? Short put, you short 1 unit. This wish list type of setup, short 1 unit. Does everybody understand that? Does everybody see that? Okay, good. Move on. So we could have sold 115 strike put, or we could have set something up like this wish list strategy, where we bought a higher strike put. And again, you can customize this to figure out your break even, your credits. Okay, so buy the 124 put, sell 3 of those 120 puts, buy a 113 put, and in this case, could have collected $7.50. Okay, now remember, selling that 115 put by itself was, I think, $4.80 credit. Here is an even larger credit. Okay, almost 60% larger, a premium you're collecting of $7.50. Okay, now let's draw this out, because most people are going to be thinking in their minds right now, I don't get this. I'm not following through here. Okay. If I had collected $7.50, okay, my break even would be about 114 on that trade. And I'm going to go through the P&L spreadsheet on this. Okay, so we were talking about wanting to own the stock somewhere 115 or lower. Here we go. Break even on this is 114. My maximum profit, if I sell this for a 750 credit is actually a lot more, almost 60% more. I'm not just able to keep the credit that I received, I can actually make more money. I'll show you how in a moment. My maximum loss, okay, my maximum loss would be 11,550. Stock went to zero. Short a naked put, stock went to zero. That is my maximum loss. Now, this is compared to selling that February 115 put for a credit of $4.80. Let's do the comparison. If I did that, easy to figure out my break even. 115 minus 480, it's 110.20. So that break even is right in the same area. Okay. And again, we can customize this to get it as close as possible. My maximum profit here is only what I've sold the put for. Can't make any more than that. So if I collected 480 on the put, one contract, my maximum profit's 480. But remember, on the wish list, if I sell it for 750, I could actually make 1150. I can make more than what I've sold the position for. And then my maximum loss, if the stock went to zero, is 11 grand. Almost the exact same ballpark as the maximum loss on the wish list. Okay, now here is, and for those of you that sit in class, you'll know we go through these P&L spreadsheets often. I did a comparison here, and I actually will post up a link here for you in the chat that you'll be able to download this spreadsheet and see the comparison. Mike Clark, I just posted up. Actually, if you can post that link up in the chat would be great. That'll take you to this spreadsheet. Thank you very much. Before we do that though, guys, here's our word of the day. And I'm using this guy, I'm using the professor again, because apparently when Mike and Charlie were doing this on Friday, a lot of people got a good laugh at the Ferris Bueller professor. So until we come up, or until I come up with something better, we're going to get the Bueller professor here. As you're doing that, what am I going to ask everybody to do here? What am I asking you to do? Get out your hammer. There we go. Smash that like button, everybody. Thank you, Mike Cook. Very much appreciated, Paul. Thank you. Yes, like that video. Okay, let's go to this P&L. Okay, so what I did here, and again, there's a link in the chat here that'll take you to this spreadsheet, which you can download. It's an Excel spreadsheet. You can manipulate any of the values you want. Okay, but in the first part up here, what I did was lay out the P&L for the wish list position. Okay, I didn't take it all the way down to zero. I just took it, in this case with NVIDIA, down to $80, but you can project it out if you want. With these particular strikes that I used, we have that 114 break even on the wish list. It's actually just a tad higher. At 114, we lose 50 cents, but that's why this is in blue here. And then anywhere over that, we make money. But here is the big benefit. Here is the big standout of this type of strategy. If we get to the short strike, which again, regardless of the type of position you have, everybody, vertical, iron condor, diagonal, calendar, broken wing, whatever it is. So wish list also, the max profit, the best spot is always going to be at the short strike at expiration. Okay. If I get to the short strike here at expiration, here is how I increased my 750 credit all the way up to 1150. Does everybody understand why? Does everybody understand why? Because we actually have, as part of the position, we actually have a long put spread. That long put spread in this case is $4 wide. Exactly, John. Perfect. At 120, our long put's worth $4. So our 750 credit goes all the way up to 1150. So Naz, you'll just have to go through the chat here and look for the link. It's posted up here. Okay. Now, what if we're not at the short strike? Okay. Anything over Sanaz again, if you scroll through the chat up above here, the link was posted a few minutes ago. Okay, we'll post it again in a little bit, but it's in there. It's in there. Okay, if we go above that, great. That's fine. We keep all of the initial credit, but you've got this whole area right here where you can make more money than your initial credit. Thank you, Mike, for reposting that. Okay, now this up here is comparison to the bottom P&L here, which is just selling a put. Okay, if I sell a put, okay, the credit there, that's my max profit no matter what. So if I am at the short strike of selling that put, which is 115 or higher, great, I keep all that profit. Look at the difference here between these two, though. Okay, with basically very little downside difference. Again, I did this really quickly, like 15 minutes before we started, because I wanted to put something that is pressing for the market today. We can customize the strikes to get the credit you want, to get the break even you want. The key again, everybody, the key again, you would only put this position on if you are willing to buy 100 shares of your favorite stock, whatever is on your wish list. Okay, so if there is a certain stock out there that you wish you could buy 20% below the market, great. You don't have to just sell a naked put. You can put on a wish list trade. Now, when would be the ideal time to do that, everybody? When is the ideal time to sell premium? Excuse me. When is the ideal time to sell premium? Bingo. David Dwight. Nicely done. No, Oscar, that's when we want to buy premium. That's not when we want to sell it. We want to sell it when it is really expensive. Clive, Robert, there you go, everybody. Okay, so when we get in a situation like this here, And let me just pull up NVIDIA here, guys, for a moment. Okay, here is an implied vol chart on NVIDIA from today. Look at that. Look at that. It has nothing to do with earnings. It obviously has everything to do with this news out today. That's the ideal time to sell premium because you've got more expensive option value, more extrinsic value. Okay, everybody understands that, right? So that's why in a situation like this, that is the ideal time. It is, Robert, exactly right. It's the uncertainty driving up the volatility. Exactly right. If I bring up a stock chart here in NVIDIA, you can see here, guys, it is doing its damnedest to hold on to the 200-day moving average right now. It hasn't seen the 200-day moving average in over 2 years. Okay. If you wanted to look at this and say, I like NVIDIA a lot. I don't care about 115. I like this area in here, 95-ish. Sure. You don't have to just go sell a 97 and a half or 95 strike put. You could do a wish list trade that gives you the same risk, but a lot more profit potential. All right, everybody. Again, those of you that are in the rooms, especially in Vol, you'll know that we have gone through wish list trades in the past. We've put some on. I want to say, again, fortunately, COVID is in the rearview mirror and that period of time, is behind us. But I would say from 2020 to 2022, we probably put on a dozen of these positions and never lost. Not one losing position. It's all about timing. It's all about opportunity. It's all about having the knowledge, having the arsenal, okay, to be ready to take advantage when something happens like this. It's also, as I started off the show with today, it's also about being prepared. How do you be prepared for something like this? You buy your protection when you can. How many of you are sick of me saying that? You buy your protection when you can, not when you have to. Okay? I talked about that for those that tuned in on Thursday when I was down on the trading floor on my Fox Business interview. What did I talk about my whole interview with Taylor Riggs? It was about buying that protection and talking about all of the upside VIX calls and VIX call spreads that were being bought. VIX was cheap. Okay? Buy your insurance when you can. All right, guys, we have a pretty full wheel today. This looks good. Here we go. Let's give it a whirl on the wheel here, guys. Wishing. Who's coming up here today? Don B, Mike Duke. Who is it? Mike Duke. Are you in the room? Are you on the show, Mike Duke? Got to be in it to win it, folks. Got to be here to win it. I know, right, Paul? Pretty brutal, right? Come on, everybody here. Everybody here smash that like. Mike Duke, are you in? If not, we're going back to the wheel. Going to give you 5 seconds, Mike Duke. And then we're moving on. Ah, there you are. Awesome. Awesome. Nicely done. Okay, Mike, you know where to send me the info? There it is. It's on the screen right now. Send me all your info, shirt size, address, Prosper Swag at prospertrading.com. Come on, everybody. Smash that like before you leave today. Appreciate you all being here, and we will see you tomorrow. Have a great one, everybody.